Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Welcome, I'm Ira Epstein, your host, and here we are on July 22nd, Friday, 2011, and we're getting on to 2:20 in the afternoon, Central Daylight Time. You know, the stock market's pretty much a mixed bag. You're not going anywhere in the S&P, and I covered this in my my financial report just a minute ago. The Nasdaq's still the strongest market, but I think it's pretty well spent its power on the upside. And the weakest at this point is the Dow, of course. Mixed reasons for all this, but you can put it all together and just say there's uncertainty right now. You're going into a weekend. You don't know if the U.S. debt ceiling is going to get resolved. The earliest I'd expect to hear anything positive would be Monday or Tuesday, if there's going to be a positive. I watched the president's talk, the town hall type meeting, as I like to call it, and people ask the questions. And I think he tipped his hand. He's not going to let the country go into a state of default, and I think what he handed when he said that to the Republicans was what they wanted. They're going to hold out for everything that they think they can get, and at the end, there'll be a compromise. I think that's what we're all looking for. The question is when and where, and that's the hardest part. So you're getting a bid right now of risk into the bond market. I was on CNBC today at noon, Chicago time, talking about that, and you've rallied up since I was even on. And the gold's up $16, and last night, if you had my twice daily updates, you know what I was recommending in gold. That does bring me, before I get too far, to my futures trading kit. My kit includes the charting software you see behind me, recorded webinars, and this is where I put out specific trading ideas along with my written and oral updates that tell you buy here, sell there, what I think. This is all part of a download. It'll come through the charting software. Emails come out as part of the trading kit. Yes, folks. My customers get access to all this, and even my customers subscribe to my research if they want my specific buy and sell recommendations. You can do so as well when you talk to one of our brokers. The number will be going right on through the bottom of the show, along with access to our website where you can sign up for this kit if you want to get that. We don't keep sending the kit over and over, so if you've had it before, the odds are we're not going to send it again. It's time for you to decide, either trade with us or move on. But let's go to the gold market and talk about this chart. You're getting consolidation at this point, right at this level. Let me step back and just show you what I mean. The market has gone up. We had a summer low, and I'll call this the low. It lasted through June. In July, we started to rally, and here we are, but we haven't gone up in the D's contract for a new all-time high. I think you can see that, and it's pretty clear. Now the problem is that I think the market's being bordered by that high and today's low. I view today's low as very important. That is the number I don't want to see taken out. Let me blow up the chart and show you why. Without knowing where the market's going to completely finish, I feel pretty safe to say it's going to finish the day higher. Why? Because at 12:30 Chicago time it closed, which is 1:30, but that doesn't mean you can't fall and then open lower Sunday. I view today's low as the key to the market. When I put on the swing line, you can see that 1585.90 now is higher than the last 1583.60. The key in the market is to not only keep this momentum, but to add to it very quickly on Sunday night. If the market doesn't do that, I'd be very cautious about hanging on. The 18-day average of closing prices in red is what I want you to think is a line in the sand. When the market is over that, you look for potential buy signals. Even if you got a signal where you took out this last break low, which I say would end the uptrend, it is not a sell signal. It neutralizes the current buy signal, which is very different than going short. If the market were to break, I would project that wherever this 18-day average of closes is a theoretical support area. It doesn't have to be the exact number. It's almost like when the market came down here and then it fought a battle to see could it go higher. Here's a case where it slid right through it and it didn't come back. When it got through it up here, it didn't come back. So nothing always works. This just gives you an idea of what a market's about. But what I start doing is I combine other moving averages to see if there's validity to this 18. And I can see that the support was the 18 and 45, and even though the market back here tried to break, couldn't even get down to it, and that's when it moved up and away. The 100-day average of closes, which is here, we haven't seen in months. So a market that stays over these is said to be basically bullish, and you got a market that came together with the 18 and 45 converged, and then the 18 is it pulled away, the market accelerated. What about resistance points? Well, the ones that I use most often in these videos, and I use others, I use window envelopes as well, I use my swing lines in certain ways, but the ones that's easy to explain here to you, and by the way, in my videos I explain more than just the Bollinger Bands, are these numbers. When you came up, this should be the stall area. It did. You've been going sideways away from the Bollinger top. So everything's right in this market to do what? Like a slingshot. Pull it back and let it go and make its run towards this 1636 area. That's assuming that the momentum stays in place, and I want you to look. Here is the momentum. It is in place. What could be the game changer? Something we don't know. Do they solve this debt ceiling issue over the weekend? That could be a game changer. Do they reach a budget compromise? That could be a debt changer. Another debt changer could be that this deal for Greece actually goes through. A plan is not a deal. The press has it, and they're leading us to believe that there's the deal in place by the ECB, the IMF, the EU. The EU and IMF, I think, are in agreement. Getting the members of Parliament in the different EU states to agree to this is not the same as a draft of a plan. So that's a kicker, and that could add to this market. There's a lot going for gold that is uncertain right now. I, for one, think the Democrats are under the gun and the Republicans are just pushing them to the wall to see how much they can get out of them. And if the president has to increase the debt ceiling a week at a time, whatever it is, while he said no, he's committed today, from what I saw in his speech, he's not going to let us go into a default, and he's going to keep the checks going out. I think the hand was tipped a little bit. In the silver market, silver is one of these markets that I think tried last night to let go of its momentum. It was trying to get the stochastic to get back under 80. It didn't succeed. So as far as I'm concerned, both the silver and gold maintain their uptrends, but I think both, you look very hard at today's lows. If they're taken out, that could be a sign that these markets want to pull back. The beauty of the metal markets is I will stick, and I've stuck my neck out, I think that by year end we're going to be higher than we're at now. So I don't expect things to get rosy in any manner whatsoever. I think that things will, if anything, proceed even worse. That's my own opinion for what it's worth, and that means I'm looking for higher prices there. The copper market, while it's up today 2 1/4, the market's got a funny pattern here. It is holding higher lows. It is holding higher highs so far, but it lost its embedded momentum, and the market has been sinking back, and what I think it's trying to do is get back to the 18-day average, which is 436.14. You can see this number right here, to look for its support zone there. Is the market as strong, from my point of view, as gold or silver? It is not. So this market could actually fall a bit more than those two markets, in my opinion. In the crude oil market, crude oil is in an overbought territory. It's fighting now a battle against the Bollinger top. We got up just recently, and I'm telling you just today, to 119. That Bollinger top's 124. When you've gotten up to it before, the market has backed away. Why shouldn't it do it again? So this is not a market that I would be telling my customers to jump into at this price. This is the gold-silver ratio. And right now, the market momentum is favoring which market if you had a look at this? Let me just stand back here. Why, it's favoring the silver. And it's favoring the silver because the lower this brown line goes, the less ounces of silver you need to buy an ounce of gold. So when it was way up in this area, and you saw that back here, you needed almost 60 ounces of silver to buy an ounce of gold. Right now, you need 39.92, and the market is trying to push the Bollinger Band to the downside in favor of the silver market. So that's got something going for it. This is the Reebok gasoline. This is called an embedded stochastic. Until the red line gets back under 80, I'm looking for the market to try to add to the fuel prices. I wouldn't be surprised to get up to the 317 area, about $8 from here. I'm wrong if you take out 305.32. Let's take a look also at the Brent crude, which I think is more bullish than the WTI. You've got an embedded stochastic. You're not even close to your Bollinger top, which is at 120.60. So I think this market can still gain on the WTI crude that we have. I hope this has helped you. Want to remind you about our futures trading kit. It's cool. It's a download feature. We then give you the user ID and password so that the charting software will work. Once you get that working, you can also view right through the charting software my webinars. It's like sitting at my shoulder as I talk to you about, I think I do 35 to 40 charts 3 to 5 times a week. So you really get a lot more than you get here in these videos. In any case, I'm Ira Epstein. Have a great weekend, and thanks for watching.